So, we have to talk about Bitcoin because everyone asks me every damn week, and it's been a long time coming, and I spent a good amount of time reading about Bitcoin, including over the last few weeks and months, secretly. I even have a Bitcoin address, which I'll need to invest and trade Bitcoin, right? So, this isn't too much of a deep dive, so it's not the kind of thing where I'm going to teach you what Bitcoin is and stuff like that. There are a million places that you can do that. That's not my job. My job is I'm an investor, and this is about a show about investing. So I'm going to give you some forecasts and an opinion. But if you want to learn the nitty-gritty of Bitcoin, there's a zillion places to do that. I even have some books in the what I'm reading section that comes later. But some really kind of just definition things. Bitcoin, all might abbreviated BTC here and there, is a currency and it uses a technology called blockchain. And that's, I think, all you need to know as a, more or less as a speculator. I don't think you need to know how it works. You know, I'm not sure that matters that much. And the other sort of semantic thing I want to explain is that you can't invest in Bitcoin. Anybody who says that they're investing in Bitcoin is it's sort of misappropriating the word. You speculate on currency. You speculate on its exchange ratio with other currencies. You don't really, in other assets, you don't invest. Investing connotes some kind of exchange for rights. It's particularly usually in equity. You're not getting any equity in Bitcoin when you buy Bitcoin. You're speculating that the value of Bitcoin will go up. Bitcoin doesn't make anything, just like the euro and dollar don't make anything. When you invest in Apple, you're buying a stake of the company, and the company is making electronics goods. Bitcoin is not an investment. It's a speculative currency. That doesn't mean it's a bad thing, and you'll see that I'm actually concluded I'm rather bullish on Bitcoin, and that I've started buying some Bitcoin. But it's really important to distinguish the two, because commodities and currencies are not investments. They can't be thought of as investments, and I think it's important to sort of consider that. So anytime you hear somebody, I invest in cryptocurrency or something, you can tell them that they're not investing in anything. They're guessing and speculating like the rest of us. So why Bitcoin? Again, I'm not going to go through the technological parts of Bitcoin, but I will tell you that one of the things that amazed me about Bitcoin is the speed at which you can do a transaction. And if you have ever done a wire transaction or done a transaction with some kind of foreign bank, I would tell you that it is almost impossible to do that quickly. There is literally no way to send $1 million around the country quickly. And in Bitcoin, you can do that very quickly. And so the question does become, will banks catch up? And so why would you want to send $1 million very quickly? Well, I remember doing some transactions where I was going to buy, pharmaceuticals, a large amount of pharmaceutical products and things like that. And it really would be nice to be able to confirm the acquisition of a deal, the closing of a deal quickly. I just want to go back real quick. Somebody's talking about speculating versus investing in the chat. When you invest, usually you're providing capital to something that would otherwise not have your capital without your investment. That's not the case in currencies and commodities. The amount of gold that there is the amount of gold that there is. You're speculating on the base value of it. The same thing applies to a euro. When you buy euros, you're not giving money to the European governments. You're just speculating. So let's not be silly about what does it mean to invest. Again, one shouldn't view it pejoratively, because you're investing. It's not something that's necessarily better or worse than speculating or trading, as another word for speculating. It's just that you're in the secondary market as opposed to the primary market. And you could be a speculator on the price of Apple without giving Apple money. When you trade Apple stock, you're not giving them any capital, but you are serving sort of a you're sort of serving as liquidity for primary investors in the secondary market, as they say. So there's no such market in Bitcoin. You're just a speculator in all scenarios. So something to sort of keep in mind. All right, so anyway, back to the speed. It is really impressive. I saw somebody mention Swift. If you've ever tried to transfer large amounts of money quickly, it is really a nightmare. The amount of fraud prevention and other things the banks go through because they have to stand on both sides of the transaction is really ugly. And I'm not sure that there's ever going to be a better sort of way to do it than Bitcoin. And maybe it's Ethereum or whatever. But the point is that it's a really impressive technology if you want to get a lot of money around the world very quickly, which I don't know of any other way to do that. And I've done some very large transactions, and it's this would be a very good solution for a number of situations. The anonymity sort of cuts both ways. The benefit of the anonymity is that nobody can control your data other than you, which is great if you're doing something illegal, which is obviously a worry to a lot of people. At the same end, even if you're not doing something illegal, hopefully you're not, there's no ability for a bank staff, which you don't want to see your transactions, clearly, but there's no ability for even the government to see your transactions, which again, you ordinarily would think is that well, that's a great thing. But again, if it makes governments nervous to the extent that they might legislate kind of against you, or against the technology, that is something that you have to sort of think about. But the anonymity is sort of a plus. Again, I see it as a double-edged sword. The decentralization, Bitcoin doesn't have any sort of entity that exists. It's a peer-to-peer network. Again, if you want to learn more about the details of how it works, you're welcome to do that, but there's no central clearing bank. There's no central bank of any kind. All of the monetary dynamics are predetermined. And that's great because the fees are exceptionally low. I will talk about fees in a second because Coinbase's fee is 4%, so that's not exactly low. That's vastly more than almost any other monetary system. So we'll sort of talk about that, but it really does keep a lot of the banks honest, which I think is great. And it doesn't mean that lending can't exist. In fact, lending will move to hedge funds and specialty lenders who are probably better equipped to do that lending anyway. So it's a really, really interesting dynamic that will sort of allow for better situation. But again, will governments sort of start to clamp down on it, or will they embrace it? Is an enormous question that'll sort of be need to be talked about. So how do we value Bitcoin? And I think if you guys have followed Bitcoin for a while, none of this is too innovative. But one of the ways when I sat down to do it is I thought about GDP to the monetary base, which can be measured as M0, M1, or M2. It's one of the first things you learn in economics. And so the amount of transactions that occur in a country, in a time, in a period, is sort of basically GDP. Now, this doesn't include assets like bonds, the value of bonds, value of stocks, etc. That number would be larger. But the monetary base in the U.S. is something like 4 to 5 billion, and the GDP is something like 17 billion. So the ratio is about 4.8x. And for euro, again, I calculated it quickly, but it was around 1.2x. And we'll do gold in a minute. And so if you use money velocity, which is sort of what the ratio is called, to back into the value of Bitcoin, this is sort of interesting. So the whole idea is that you can calculate both the monetary base and the GDP of Bitcoin easily. So the concept of GDP is all the transactions, and the monetary base is the value of all outstanding Bitcoins. And so if you do that, you can start to sort of think about, forecasting, for instance, how many transactions will take place. And then you can back into the monetary base and then divide by 21 million, which is the amount of Bitcoins that exist. You start to get a value that's very attractive. You can transactions are growing 40% year over year. So if you just strip out the fact that the values are rising much faster than that, then you can sort of just strip that out to transactions, and I think transactions will grow at 40% year over year for a while. they've really started to become somewhat stable. But in any event, the point is that you can reverse engineer a price for Bitcoin, and if you do that, the prices are rather favorable. Gold is often, people look at Bitcoin and gold as similar, and they are quite similar. And the value traded of gold in a given year in the futures contracts market is about $36 trillion, which is an enormous number. But all the gold in the world is worth about $8 trillion. And you have that magical ratio of around 4.7x, which is sort of mysteriously interesting. So if you look at the 2016 notional traded value of Bitcoin, the last 30 days run rate is about 200 billion. And if you divide that by 5, that sort of ratio, aggregate Bitcoin should be worth about $40 billion, which it roughly is, which is kind of amazing if you think about it, that it reaches that parity. Now, the whole point of the markets, though, is that we discount the future. And what's interesting here is that you have likely increasing Bitcoin transactions for some time. In fact, I think that we'll go from 200 billion to $1 trillion in notional traded value of Bitcoin very easily. And if we do that and the ratio stays the same, Bitcoin will be worth $10,000 a Bitcoin. And I think that it wouldn't be hard for it to hit that or something much higher. The whole point is that that Bitcoin is extremely useful. And a lot of people, I see some silly questions about intrinsic value. No currency has intrinsic value. That's the important thing to understand about fiat. The only commodities that have intrinsic value are really oil. Gold has no intrinsic value. I think most people agree on that. It's not particularly useful. It has some industrial uses, but they are far less than really their value that's priced into the metal. So currencies in general don't have intrinsic value. They're not backed by anything. We used to have something called the gold standard, which is, again, a little laughable because if you back a currency with something that's also has no intrinsic value, you really are back in the place you were. And money by its nature has no value other than its a replacement for work that you can barter for work. And if you guys told me right now that, hey, Martin, I'll send you 10 Bitcoins if you looked at my portfolio and gave me some advice, I'd probably do it. But for half an hour or an hour or so. But the point is that if you told me that you'd ask me to do it for 1 Bitcoin, I might do it just because Bitcoin are interesting to me and I want more Bitcoin. But if you said half a Bitcoin or a tenth of a Bitcoin, I'd say that's not worth the barter. And that's the nature of currencies, that it's a barter tool, and that that's sort of the unseen hand that changes the value of currencies. And Bitcoin, the really important thing here is that it's extremely useful, and that at the end of the day, people like Bitcoin because of that. It's not sort of it really is a sort of progression of the way we look at money. Again, whether you want to be sort of wax poetic about it and talk about it as in terms of the same impact the internet's going to have, the internet had, and so forth. I'm not a poet, but it certainly, if you look into the details of it, there is a remarkable benefit from Bitcoin that can't really be rivaled easily. And I would suspect that it's going to be here to stay, and that the more transactions that take place with Bitcoin, the more likely we'll value it at that sort of 4 to 5x ratio, and the more valuable Bitcoin will be. So whether the alternative currencies or coins will show up and do well, nobody knows. Certainly there's no reason why we can't have 3 or 4 of these types of coins. But in any event, I do think it's early days for Bitcoin, and that we could easily see the price go up several fold. So I wish I could buy Bitcoin without a 4% fee. That's a really nasty fee. So I'm going to look for a vendor that'll let me do that. If you guys know of any, feel free to email me at martin@thoughtpatrol.com. I know that there's a lot of vendors out there, but a reliable vendor would be welcome. So I'm bullish on Bitcoin. People have sent me about $20-$30 of Bitcoin. Thank you, all you great strangers. But I'd like to make a real investment in Bitcoin. So what will happen with Bitcoin? Well, I think that J.P. Morgan, Bank of America, Citigroup, and Wells Fargo, if you look really long term, I think these companies may have a hard time. You can strip out the advisory business. If you look at Goldman and Morgan Stanley, those banks don't really have deposits, and their deposit is their book value. Whereas J.P. Morgan, Bank of America have customer deposits, and they lend those customer deposits. I could see there be specific mortgage lenders that sort of spring up, that if you wanted to buy a house with Bitcoin, you could do it with a dedicated mortgage lender. But it could be the kind of thing that you can short. Did I just say investment? Of course, I was speculating. Of course, I'd be speculating, not investing. But that's a slip of the tongue. Anyway, the investment banks are different from the full-line banks in that they don't have deposits. So you can actually hedge that out pretty well. And if you wanted to make a really interesting trade, if you're at a top hedge fund and you had to trade billions of dollars, you could do a really fun trade here, shorting J.P. Morgan and Bank of America and going long the traditional investment banks, not the commercial banks, and see what happens. PayPal was supposed to be Bitcoin before Bitcoin happened, and they sort of failed in their goal to do that. So we'll have to see how PayPal kind of thinks about how to live in this world. It may help them, it may hurt them, but it's something that's, I think, pretty interesting. So in general, I really like the idea of Bitcoin. I've enjoyed using it thus far. I would trust a very large transaction in Bitcoin. Like most trades that one makes, you shouldn't have too much Bitcoin. I might put 1% or 0.5% of my funds in Bitcoin, but you should never have 5 or 10% of your funds, and usually in anything, unless you're really sure. And something like Bitcoin, I would sort of be careful about. The reason is good portfolio management. Even if you're right about Bitcoin, and Bitcoin goes from, say, $2,000 of Bitcoin to $20,000 of Bitcoin, which I think is possible. I'm not sure how likely it is, but it's certainly in the realm of likelihood it's worth talking about. That's a 10x return. So if you turn 1% of your capital into 10% of your capital, you make 10%, which is a great, healthy, long-term return. All you need to do is one of those a year, and you never have to trade again, and 99% of your money is in cash. Of course, it's hard to find one 10-bagger a year, but if you find one 10-bagger, say, every other year, or every 3 years, and the rest of your portfolio makes 3% or 4% or 5%, you can actually have it such that you have the bulk of your assets in cash waiting for a downturn. And this is a method of investing that Seth Klarman and other great investors use, which is to be cash rich. And that's a really important sort of concept in investing, to me at least. All right, so what about threats? Obviously, we talked about Ethereum briefly in terms of an alternative coins. If there's a really dynamite alternative coin, then you could certainly see some threats. But I think Bitcoin is enough of a sea change that I'm not sure that people really want alternative coins, and there's a reason that Bitcoin is the most popular, and will probably stay that way. Just as sort of the way I look at disruption and kind of the way disruptive forces work. I don't think there's enough from the other currencies. I think Bitcoin will be the gold standard for some time. Legislation is pretty scary. Obviously, to a certain extent, one can't avoid Bitcoin, but I'm kind of reminded of the gambling in the U.S. Statutes. There's some serious. There was some thought to have online gambling in the U.S. and it was banned. And one thought, well, how do you stop that? And there are ways to stop it. So if you don't believe me, try to play a hand of poker online right now in the U.S. It's almost impossible. So Bitcoin could get stamped out by legislation, and obviously the banks have very large lobbying interests and could attempt to do so, whereas Bitcoin has no such lobbying interest. So it's one thing to keep in mind, and again, this is one of the things that it makes sense to sort of keep your position sizes small. Again, the Coinbase transaction fee was weird. I know these guys are raising money. They're being valued around $1 billion. pretty amazing. They're one of the trusted, Bitcoin traders. That's a great business model if you can keep your fees at 4%. Hopefully those fees will go down, but pretty difficult fee basis right there. Anyway, I'm bullish on Bitcoin. I'm probably going to have a small position in it at some point soon.